Welcome to Financial Revelations. I am David Safransky, your host, and it's the birthday edition. The podcast is 1 year old. What? Happy birthday, podcast. Yes, we are 1 year old. 1 years old. 1 year old? 1 years old. I don't know which one it is. Countless episodes in the past year. Tons of wisdom. But wait, there's more. Two lucky winners are going to get a $250 gift card. And all you got to do is answer a very simple question. Now, I know what everybody's going to do. You're going to go and Google the answer. That's what I did. But you know what would help to win too is if you answer the question and throw in some very kind and complimentary comments about your host. That's who will win one of the $250 gift cards. So there's two of those. There's going to be two lucky winners. It requires two things: a correct answer and some kind and complimentary comments on your host, David Safransky. And all you have to do is email that answer and the kind and complimentary comments to Joshua at epsf.com. He's going to put the address right here. You could also follow us on Twitter at FI Revelations. Joshua will also put that up. Winners will be announced next week on the official Turkey edition of Financial Revelations. The Turkey edition being recorded while we prepare a turkey dinner. Actually, that's not going to happen, but we will record, and it's the week of Thanksgiving next week, so we call it the official Turkey edition. I probably won't be wearing this complimentary hat next week, but I'm going to wear it for this podcast because, of course, we're 1 year old, and that's very important. You know, when we first started thinking about the podcast, I thought, well, who really wants to hear what I have to say? It turns out a lot of people want to hear what I have to say, and I do think that one of the things that we've been able to do in the past year is kind of give you some insight into how money is managed on a professional level, what we think about, what we look at. Sometimes it's just financial stuff. A lot of times it's financial stuff plus the political environment, the geopolitical environment, domestic politics. All those things really go into play because they have a big effect on what's going to happen in our markets. And what happens in our markets have a big effect on what happens around the world. Will people make money? Is capital going to flow here, or is it going to flow out of here? And we're going to talk a little bit today about some of those geopolitical factors that come into play when we manage money. And this week, in fact, yesterday, the infrastructure bill got signed into law by Joe Biden. It's not really an infrastructure bill. Only about 8% of the money actually goes to building roads and bridges. But one of the other things that they throw in there, which I like this, I really do like this, is that they're going to have a real push to have broadband brought out to suburbia or the country and places where it's hard to get internet. So there's going to be a big push for broadband internet access. And when kids stayed home for a year from school, if you didn't have broadband access, it was really hard to stay educated. A lot of kids got behind. So that was one of the weaknesses that were shown when kids had to stay home because of the pandemic. There's nothing to say that that can't happen again. Or it does seem like we're keeping lockdown in a lot of places where we don't need to stay locked down. But so the bill got signed. It is somewhat inflationary because it's going to dump money into an already kind of overheated economy in the sense that prices are rising. And what causes prices to rise? It's a very simple thing. You think, well, there's so many factors that go into inflation, but it really is just two things. Too much money chasing too few goods. So when you have a lot of money in the system, what you have to do is you have to increase productivity constantly. You have to be producing more. The same people have to produce more of the same goods and services than they did last year, or prices start to rise because money's chasing something that isn't there. And economics says if I have just one of a product, but 100 people want it, that price is going up because I know I can get more. And that's kind of what's going on right now. We didn't produce a lot of stuff in the pandemic. We couldn't build a house. What do housing prices have done? Housing prices have skyrocketed. There's just not a lot of houses for sale. So people who want to buy a house, they're willing to bid up that price. And that's exactly what's happening. So if you dump more money into an already heated economy, already inflationary, you're probably going to get more of what? Inflation. And I think we'll probably get some more inflation. Right now, inflation's running at about 6.2% year over year. It wouldn't surprise me to see it closer to 10 by the end of the year, early next year. Now, we do know this. The Fed is going to probably raise interest rates in March or April, and that will cool things down a little bit. But I have an inkling here that the market is going to outgrow the negatives in the economy right now. What are the negatives, and why do I think it's going to outgrow? And that's really what I want to talk to you about today. The first negative in the economy is inflation, and we just talked about that. And it does, the people that it affects the worst are the people kind of on the socioeconomic fringes. So lower socioeconomics, right on the edge of middle class, people living right at the edge of their budget, because you just raise their cost by 6-7%, sometimes even more. And they can't afford the same amount of stuff. They're not making any more money. For instance, for me, I have a pickup truck that I drive in the winter. It cost me $105 to fill up my pickup truck the other day. I'm not going to curtail my driving. But if I had a really tight budget, I probably would. So inflation is definitely a negative. The next negative is really the Biden administration's economic policies are not really that smart. And they're costing the economy a lot, especially on the fuel and energy side, where it's going to be very expensive to heat your home this winter. Very expensive. Natural gas prices are about as high as they've been in 30 years. That's a real cost to people. People who, like to stay warm in the winter where I live, they're going to be paying more and turning down their heat. So that's a negative. That draws money out of people's pockets. The third thing is these high gasoline prices, which we're going to talk about. We're already talking about closing another pipeline. There's only one reason why you would do this. You want to make gas prices so unpalatable, so expensive, that people say, all right, give me the ugliest electric vehicle you can find. Not going to be hard, because most of them that are affordable are ugly. Audi just came out with a beautiful electric vehicle. I mean, it's so beautiful. It's also $160,000. So, to be honest, you don't really sell too many $160,000 cars. People that are on the fringe economically, they're not buying that car. They're going to buy a Model 3, or they're going to buy something that Ford comes out with. Not that it's a bad product, but there's not really a lot of charging stations. And if you live in a building in Chicago, you're not buying that car. There's no place to charge it. So here's why I think, though, that our economy right now is probably going to outlast some of those things for the foreseeable future. And when we have the midterms coming next November, we're about a year away from midterms. I think going into the midterms, we could be seeing the economy start to falter if things don't change. But here's why I think it's going to take that long. It's going to take that long because the economy is still in the reopen trade. When you look around, now I've been flying a lot lately. So I've been in a lot of airports. I've seen rental car facilities. I've seen the parking lots in airports. They are about 3/4 full parking lot when you go to park before you fly. Now I fly out of Cleveland. There's plenty of parking on the 4th floor of the parking garage. Not so on 1 through 3. And the temporary lot was full the last time I was there. I never park in the temporary lot because it is so far away and it's not under cover. And so if I take a late flight home, I just don't want to walk that far and be in the rain. So I park in the parking garage every time. It's a little bit more expensive, but it's worth it to me. But as I'm seeing the parking garage fill up, I know people are kind of getting back to traveling for business. I fly during the week mainly. That's when business travelers fly, generally not on Fridays, sometimes on Monday, but leisure travelers fly on Saturday to Saturday. So I'm seeing airports get a little bit fuller. Cruise lines are starting to operate. You're starting to see that leisure travel really pick up again. And I think you're going to see airlines really do well in the next quarter because foreigners can come here again. We opened back up the vaccinated travelers. So you're seeing a lot of people from Europe and other countries come here, South America. that's really going to add a bump to some of those leisure stocks. But by and large, we're going to be reopening, and we're going to be in the reopen trade for the next 12 to 18 months. Now, at some point, that it's going to be baked into the cake, and people are going to know that it's kind of coming to an end, that when we're fully opened and we're open, then those profits are baked into the cake. But I think that trade is strong enough to where it's going to outlast inflation, the Biden administration dumb economic policy, and higher fuel prices. Murphy's Law would say it's going to be the coldest winter we've had in 30 years. Why? Because fuel prices are expensive. And that's kind of the way things tend to happen. If you look at the Farmer's Almanac, they do say there's going to be more snow this year. I love a good snowy winter because I have a four-wheeler with a plow on it. And unless you've plowed snow on a four-wheeler at 30 miles an hour, you haven't lived. So if you'd like to try it, you come out to my house. I'll give you, you could plow my driveway if you want. I'll let you do it once. You know, I like to do it too. But I really do think that for a while, it's going to probably be colder than average because fuel prices are higher than average. And that just seems to be the way things work out. And if that's the case, I could be a little bit wrong about the timing. It could be the reopening trade could settle a little bit sooner than 12 to 18 months. You know, if you said 9 to 14 months, wouldn't be crazy. But be prepared to pay more, but be also prepared to make more in the market while the reopening trade happens. And I want you to answer the question. Don't forget, the question is, who was the first Fed chairman? And there better be some kind and complimentary comments in your answer. And you may be a winner. We're going to announce your winners next week. There'll be two winners. You'll get a $250 Visa card. You can spend wherever you want it. Be just in time for the Christmas holiday. And with inflation the way it is, it might bring you back to whole when you buy your Christmas presents because everything's going to cost more. I am David Safransky. This is Financial Revelations. We are 1 year old, and we love you guys. We'll see you next week.